This episode is brought to you by Raymond James. For over 25 years, Raymond James has been helping Canadians achieve their financial goals. They are Canada's largest independent financial services firm with over 520 dedicated advisors. They've got $88 billion in assets under management and capital market services. With no proprietary product to push, their advisors are free to focus on the unique needs of their clients. Now, whether you're saving for your children's education, preparing for retirement, or safeguarding wealth for future generations, Raymond James is committed to guiding you every step of the way. Visit raymondjames.ca today to discover how you can live a life well planned. Hey everyone, this is In the Money with Amber Kanwar. We are still doing our CEO Summer Series, and on this episode, we've got Michael Cooper of Dream Unlimited. Dream is a massive real estate company that's got a portfolio of assets totaling over $27 billion. And right now, there are a lot of anxieties in real estate, and Michael Cooper actually talks unusually candidly about those problems. But he also says there are definitely pockets where you can make a lot of money. We're going to find out what those are. He'll also give us some insight on what it takes to be a smart real estate investor and how he got his start in the business. Let's get into it. The information provided in this podcast is for informational purposes only and does not constitute financial, investment, or professional advice. The views expressed by the host and the guests are their own and do not necessarily reflect the opinions of any organization or company. The host and guests may maintain positions in any securities discussed on the podcast. Always consult a qualified financial advisor or professional before making any investment decisions. Thank you to our partners at ATB Financial. With $62 billion in assets, ATB Financial is powering possibilities for more than 820,000 financial services clients in Alberta and beyond. ATB's capital markets arm is a full-service investment dealer that offers investment and corporate banking, sales and trading, institutional research, and risk management. Visit atb.com/inthemoney for more information. Michael Cooper, thank you so much for being with me.
Thank you for having me.
I was about to call you the CEO of Dream, but that's not the title. It's Chief Responsible Officer.
Yeah.
What is with that title?
Yeah, it's not too complicated. Maybe 10 or 15 years ago, I was sort of thinking that the more senior you are in an organization, the more responsibility you have. Sometimes I found it frustrated that some people thought the more senior you are, the more perks you get. So I thought it was like the buck stops here kind of thing and just say, president, chief executive, like there's a lot of big titles. I just thought that maybe having responsibility was a more prudent thing to have in your title.
And you're responsible for a lot. I think the easy way to define where you are is real estate, but, and fatherhood, obviously a bunch of 700 children, I think you're up to. But it's in so many different slices, pretty much every single slice. I'd love to know the origins of real estate for you. When did you first get involved? Why was it real estate and not any other area?
Yeah, I think that I was introduced to real estate through washing other people's boats. And I washed a lot of boats when I was younger. And there were different kinds of owners of boats. And the doctors and lawyers were okay. The business people were not just more interesting, but I thought they treated me better. And the real estate guys were, they were all full of energy, charismatic. They were interested in me. And I met one particular real estate guy when I was 13. And the long story short is I kind of imitated him. So seriously, this guy, if you think about a trajectory of your life, when I met him, it totally changed. I don't think I knew anybody whose father worked in an office. And I had just had no imagination about, I was 13, so I didn't really think that much about stuff. But in meeting different people who were working, the real estate guys really stuck out. This guy really stuck out, and he introduced me to a completely different type of life. And I was 13, but when I was 25, I went to work for him. And probably from the time I was 13 to 32, he was the most influential person in my life. And just absolutely profound how my life changed from when I met him.
Because of the opportunities he gave you, or just being able to study like kind of next to him, what he was
doing? It wasn't
doing?
even like that. He was an incredible human being. and he was thoughtful. He was well respected. He was really decent. He was smart. And I think one of the things I learned is if you want to be a leader, people have to be able to follow you. And he was the kind of guy that everybody wanted to follow. People wanted to be liked by him. I remember one time we had to relocate a McDonald's in order to build the elevators of a building. There's no other way to do it. And I've been working with them. They were so tough. They sort of said, they'll close one night at midnight. They have to open at 6 a.m. The only thing they'll take is cutlery. And I asked him if he'd help me. And we went there. We had a great meeting. They agreed to everything he said. We got back to the office and I was telling him, like, I never could have done it without you. And back then we had voicemail and there was a little triangle on your phone if you had a message. And the guy from McDonald's called to say, like, we didn't mean anything. We just couldn't say no to him.
Wow.
So it wasn't just simple stuff. It was like, I liked the way this guy led his life and the choices he made and the life he'd built for himself. And I thought I wanted to do that.
Who is it?
His name is Walter Zwig. He was actually a very private guy. He built a lot of office buildings. His big idea after World War II was, which sounds like it would be obvious considering we have this, transportation for real estate, but he built the Young Eglinton Center. He built Fort King on top of he built on top of subway stop shortly after the subway was completed. And that's how he became one of the most significant landlords of office space in the city.
You're touching on a bunch of things like taking responsibility, being personable. But I also liked your point about people in real estate being sort of a different breed. And I do find that too. Maybe the more Bay Street types they're stuffy and they live in kind of a box. No offense to the guests who've already appeared on our show, but real estate, it seems like there are people who understand the finance stuff, but then there's something else. What do you think that something else is?
Well, a lot of this stuff in real estate, I mean, you have to have an idea of what you're trying to do and have imagination, have some design. You got to be able to work with the government authorities because literally nobody can extend their kitchen without getting all these approvals. So you got to be able to work with bureaucracies in order to do the type of deals that, whether it's an office building where people can lease space from you or even apartments to make it desirable or condominiums, you got to make something that people want. Dealing with banks, you get your financing, you've got to convince all these different people who come from very different backgrounds. And some are very focused on money, some are very focused on community. So to be able to bring all of that together takes a lot of different skills. And I think you got to be, you don't have to be like loud, but I think you've got to be gregarious and interested in people. When you deal with the city as an example, they're really focused on the social aspects and the developer is trying to make sure they get the financial side done. But if you really understand what the city's trying to achieve and you value that, it makes it a lot easier to work with them in a way that, you're validating what they think is important and you're trying to do it in a way where it works out okay for the investor. And we often work with different government agencies and we often offer our analysts to help them with, let's just take a look at what you're saying and what that would mean to the pro forma. And how about if we do it a different way? Here's something that doesn't cost as much money, but I think it'll be a bigger benefit to the community. So if you can try to find a way to bring all those parts together, and they have to happen on the same day. You got to get the financing, the approvals, construction contracts, everything on the same day. So it does require a lot of different skills.
That's exhausting just to be in one asset class to do that. And as I said, you do it in a bunch of different asset classes. How did the dream come to be, which is what, your entities are known as?
It's a complete linear step from what I said before. I mentioned that I worked with Walter Zwig till I was 32. And I started working with a guy named Ned Goodman just before I turned 33. I have January 4th, 1994, I joined him. I turned 33 4 days later. And it was to create a real estate company. The name of his company was Dundee Bank Corp, Dundee Corporation. And as years went by, the dream meant Dundee Real Estate Asset Management. And I want to do that because after working with him for so many years, I want to make sure that the heritage of our business included the name we started with and with Ned. And also that I thought that Dream was a really aspirational name, one that whenever you see our letterheads or contracts, it's right in it. So hopefully it encourages me and everybody else to try to aim high.
Middlefield has spent the last 45 years creating and managing wealth for clients through every market cycle. With approximately $3 billion in assets under management, they focus on actively managed strategies in sectors that matter, like real estate, healthcare, innovation, energy, and diversified income. Middlefield's high-conviction portfolios are built and managed by sector experts to identify opportunities and navigate market uncertainty. Check out middlefield.com to learn more. What are the total assets, like the value of all the assets? Do you know offhand?
I think it's $28.6 billion.
Mainly across Canada.
Mainly across Canada, and we're in many asset classes in Canada. In the US, we have about $2.5 billion in industrial and apartments. And in Europe, we have about $3.5 billion in apartments and industrial. When you asked earlier, you mentioned that we do a lot of things in real estate. Well, we really have 11 different entities, 5 are public, 6 are private, and they concentrate on different aspects of the business. And we're a real estate company, and then we set them up so that each one is investable in specific areas.
Yeah, why did you do it that way? There are so many publicly traded dreams, and then as you mentioned, there's like more that are private. That seems like a lot of paperwork and a lot of the auditors must love you.
I wish you hadn't said auditors. It's a tough. They're changing the rules a lot. It's very complicated. I think they're making statements less easy to read as time goes by. So they have a tough job, and it's tough dealing with them. But they do like the stream of income for sure. I think that in real estate, diversified companies haven't been very popular. A lot of people say they want to make the choice as to what they invest in. Like it should be office or self-storage, like specifics, and you shouldn't commingle them because they kind of lose control. Instead of them being the portfolio manager, the management company is the portfolio manager. And I think in a lot of businesses, there's a lot of different things in companies, and that's fine. But in real estate, it really seems to be a strict rule. And to be blunt, we want to do different things. So we set up businesses for each one. And it's kind of like your children, because some of them look great at the beginning and they're beating the others, and then they kind of go sideways and the others pick up. Like you never know which ones are going to win. But because we have so many different entities, you always get to grow the winners, and then you kind of manage the ones that aren't doing as well for a while. We can sometimes call it hibernation, where you're trying to keep things as stable as possible and kind of waiting for the next time that there's going to be a growth spurt.
Let's talk about the current problem child, which I think is office, although I don't know if it's fair. Maybe it's getting back on the right track to continue with that child analogy. I know Dream Office, which you're the CEO of, just reported results, and you talked about it kind of almost sounded like an optimistic phone call for the first time in a while, that we're hearing so many return to works, people are coming back to work. Like, how bad did it get for office, and where are we today?
Well, to deal with office, we have other land development in Toronto is very tough. So we got another problem. Office, I was on BNN in the spring of 2020, and I said that I think that the changes are massive. And it was already 2020, and it looked like things were kind of a wreck. And I said I thought it'd be at least 2022 before things could return to normal. And I got pillared for being so negative. And then a couple of years ago, I said in 2023, I remember saying that it really feels like snakes and ladders, where like you lease some space, you're getting ahead, and then you lose a tenant and you go right back to where you were. So it's been brutal. I think that whether you're an institution or a public company, people talk their book a lot, and I tend to be a little bit more blunt than that. And maybe that's partly because we have a lot of different entities. I don't have to just...
You don't live and die by this one.
I don't have to talk my book all the time. But in office, it's actually been... In 2016, it was a very bad time for us. We had 172 assets, $7 billion of assets. We sold 142 of the 172 assets to really focus on our better quality assets.
Before 2020.
Between 2016 and 2019. And we reduced our leverage rate, and we bought back 40% of the company. So we thought we'd done something really smart, and we put our company in better shape. In 2019, we were really quite content for 6 sleeps or something like that. Maybe we were content not realizing that COVID was already percolating in China. But then there was just another wave of destruction. So, it's almost been 10 years of trying to get it right. We really focused on good quality downtown buildings, and we've done a lot to animate them, and we've got great restaurants in them. We've done all new lobbies on our Bay Street collection, new facades, all new bathrooms, and the buildings are really in quite good shape. But, it was almost impossible to get somebody to make a new decision to rent space when their people were at home, and it's continued on. So I think, I think I was more positive, and I remember on that call I was saying, I'm really glad that we're not talking about having more office tours. Everybody talks about we're having more tours for years. But now it does seem, we're seeing the banks making some big decisions. 4 of the 5 big banks are looking each for 200 to 500,000 square feet. That's a real thing. People are coming back to the office. I did say, and I do believe that with 6.9% unemployment, part of the reason why people are saying coming back to the office is if you don't want to come back, that's fine with them.
And that's why we're seeing the job losses, because now employers are okay to just say, don't come back.
I think so. I think they're saying, I was actually at lunch with a guy today whose kid was interning at a big bank, and his kid decided that even though they're only required to go in for 2 days a week, he'd go in for 5 days a week and he'd wear a suit. And he said the kid, I don't know why he thought that, but his kid thought he should do that. And he'd be at the office with senior officers all day long, and he'd always ask people what they do and try to ask them about their jobs. But it was the most senior people at the bank.
Smart.
And obviously he got hired back. So the idea that if you go to work and you work hard and people see you, the idea that that is such a huge advantage is something that I just can't believe everybody doesn't jump on.
I see it when I was working with young kids. Well, I can't believe I'm saying young kids. I'm not even 40 yet. But I would say, in my old newsroom, I would say, I don't know. I don't think enough people are crying in the bathroom. Not because I'm mean, but because I'm like, do you not want this? Like, I cried in the bathroom when I didn't do a good job, giving a research pack to one of the anchors. Like, it meant something to me.
I think that there's been, since COVID, there's been a lot of effects. And I think that throughout the country, we're really feeling the lack of productivity and in a way, kind of like the declining fiscal situation. And a lot of it we can do better at. And I think slowly it's changing, but I think it's going to take a long time just to get back to the level of productivity from 2019. We're
going to talk about that because I want to get your thoughts on Canada and how we get moving again. But I want to stick with office for just a second, because you said the banks are making these announcements. It's starting to trend in the right direction. It's unlikely that it's going to reverse, and maybe it takes some time before we get back to where we were. But the dream office stock hasn't moved. And I'm curious why you think that is. Is it just because there's so much more available space that needs to be sopped up? Like, what do you think would be a real inflection point before people can get excited about this sector again?
I mean, I would question whether people are generally excited about Canadian real estate. But putting that big question around, we got to see less vacant space. And this quarter, we announced higher committed space. We had to take back some space from tenants who were subletting in order to make space for the new leases. So our currently occupied was down a little bit, but it's pretty good. And we're going to see more of that.
What are you sitting at now, occupied?
In downtown Toronto, I think we're at 84%.
Okay.
We used to be at 97.
Yeah.
And we sort of have this model where we said in 2023, we're saying, if the conditions we were facing at the trough continue for 24, 25, and 26, and then we go over the next few years halfway from the low to the high, we'd be a pretty good company. And I think what we're seeing now is a little bit of a pickup, which would be ahead of schedule. And if we were at 97% and got down to 80, if we're at 88, 89%, that would be pretty good. If our costs to secure new leases were halfway in between, that would be pretty good. And if we achieve that, it would mean that we got good revenue and our expenses relating to leasing will go down. And that will make the company really change.
There's M&A in the real estate sector, and we're going to talk about that. But I'm curious, is anyone kicking the tires on office right now? And is that a first sign?
Office has been a very difficult asset class to sell. We've sold some buildings. We sold 2 buildings, one to like lab space, turning an office building into lab space, a US group. The other one was the Ontario government. H&R sold a building to George Brown College. So what you were seeing was sale of office buildings to really institutional uses. Very little conversion to residential, but definitely conversion to institutional. And it's been a few million square feet that have disappeared.
There's a lot of talk about conversion. I know this has been going on since the pandemic. We'll just convert it because we need all this housing. Well, we know what's going on with condos.
Do you have the housing crisis on your list?
Of course.
Let's get to that
very
at that
next
time.
Topic.
Good. I think that the institutional use of office is a big deal. Housing can happen. We're doing a building in Calgary where they're giving you incentives. In Toronto, it's one-off. There's some of it. It's not that easy. And then we generally have a relatively soft condo market, well, a dead condo market, and rental market is tough, but it's not bad. So converting from office to residential, you got to make the numbers work.
For a decade, the Murray Wealth Group has been dedicated to disciplined, long-term investing. The result? Their global equity growth fund boasts an impressive 14% compound return since inception, and they're proud to celebrate their 10-year anniversary of building wealth for investors across Canada. Discover how the Murray Wealth Group can work for you by visiting murraywealthgroup.com. World-class investing, wealth built together. How bad is the condo market right now, and how much worse does it get?
Well, I mean, new supply is almost zero. We've got one building under construction. I would say this, that most buildings that are finishing, the buyers are purchasing them. But a lot of the buyers were investors who did very, very well and were much shrewder than institutions, because what they were basically doing was they would buy a condo unit to help the developer get the financing to be able to build it. And they get a discount. And then over the 3 or 4 years to build it, the value would go up because now it's a real thing. They could rent it and get a decent return, or they could sell it and make a big profit. So they did very well for 20 years. And now what's happened is the prices got ahead of themselves. The construction costs went up a lot. Development charges went up a lot. And now there's 25,000 units more or less finishing in calendar 2025. And a lot of the people who bought them don't want them now. So you end up with very loosely held inventory, and it's going to be sold out. So I know of people who are saying, like, it's so cheap, I should buy one for my kid, even if they're not that old, we'll rent it out. So right now there's this huge supply of new condos in the rental market, but it's going to start unwinding as more and more people say, you know what, I'm ready to buy something now.
Is that a year? Is it less than a year? Does it matter what interest rates are doing?
I think the bigger issue is the demographics. We had ridiculous, 3% growth in population. I think now we have 1.2%, which is massive compared to most developed countries. But it's a shocking reversal of the numbers we had before. So we have a lot of condominiums being finished, and we have a population going the wrong way. It's not decreasing, but it's not living up to the numbers that were expected. So I think that's a bit of a setback.
It's so funny because I would talk to developers all the time. What's his name? I'm trying to remember his name. Barry Fenton.
Yes.
Barry Fenton at Lanterra. I've interviewed him a bunch of times. Sorry, Barry, for blanking on the name. And I always ask him about, immigration, because before, the backlash on immigration, there were all these foreign buyers tax and everything, trying to squeeze out the demand. And I remember developers like Barry and others would say, I don't need immigration. We're so constrained on housing supply that, I could sell to just Canadians. So what happened to that? Or was that never true?
It probably got out of hand, but there was tremendous drivers. One of the things they did was they stopped foreign buyers of condos, which was reversed because the pre-development sales, as I said, were financing. So now a lot of people are building purpose-built rental. And even before this, some institutions were doing purpose-built rental. But all these individuals who were buying apartments that were funding condo developers and leasing it, they were actually ahead of the institutions and everybody else, and they made a fortune buying condos. But no, there's definitely a demand issue.
What about all these politicians? And you mentioned issues you're having in Toronto. They all want to build. They all want new housing. I mean, we've also got a homelessness crisis, like in most major cities across this country.
The issue around homelessness is much more of a political issue than a financial issue. And a lot of it has to do with, and you're seeing it play out in Vancouver, does a person have the right to make a decision for themselves? And when is it that the government can say, we need to get you help? And what's happened over the last number of years is the governments have really said, well, it's up to the individual, and unless there is imminent harm to them or other people, the government won't step in. So it's just a legal issue. It's not a financial issue. The federal government's putting out lots of money. Just a question of, they have sites for injections, but you're not allowed to talk to anybody there about getting off the drugs, because that would discourage people from going to the injection sites. So this is just political. And if it depends on what you believe in and what decisions you want to make. But if you want to get rid of homelessness, we need to have enough beds, and we need to be able to tell people, you're not allowed to live here, and you're not, like, I don't mean it in a tough way. What I mean is, I don't think that looks like an excellent life, to be living on a grate. I can't believe we're doing that to help the person. So there's lots of point of views. I'm not even saying what point of view is. I'm just saying it has nothing to do with money, because we have the money and they're trying to spend it. It's really a question of what rights there are, and I guess a lot of people.
So it's ideology. It's because we want, safe injection sites. And I like to say I'm, as woke as the next person, but I've looked at what's happened in my own city in areas that used to be fine to walk through. And in downtown Toronto, more and more places are becoming unwalkable or feeling unsafe.
Firstly, I'm just saying, if you make a certain rule, you get a certain outcome. Whatever you believe in is fine. It's just that rule will not get a different outcome. It'll get the outcome we have now. So if it's valuable to make these decisions, this is the outcome.
But what would it, so if it's not what would it take for you to build, or for you to think that this is the right, you feel confident building, putting up another tower here? Oh, sorry. I was thinking only about homelessness, and the federal government has done a rapid housing initiative. They're working with the cities. There's a lot of money available. They bought hotels. So they're trying financially, but I think the policies also have to change to get there. On new construction, it's very complicated. I know we have a housing crisis, and I know we're saying we have a housing crisis. I know we're saying how many units we need. I really do struggle with what's the math behind it. And I think there's a bigger issue, which is people don't make enough money in this country. And we haven't. And again, I don't care on the left side or the right side, but I would say there's probably a shared view that healthcare is important. Education is important. Transportation is important. All these things are important. And in order for us to be able to have those things, we have to have an economy that's big enough. And we can talk about how you slice and dice it, but it's got to be big enough to cover that. And I think there's been more focus on redistribution than growth. You can see it in so many different areas, but the per capita income in Canada has gone down a lot. And what's happening now is people have a hard time affording the rent, and they have a hard time affording a house. And the big issue in the housing crisis is people aren't making enough money. That's a systemic problem. We do a lot of work out west and in Alberta and Saskatchewan. Very different situation. What's the situation? They make more money out there?
They make more money. They keep more money. They got better infrastructure. Houses cost about half what they cost here. And it works. It works financially when oil's up and even when oil prices are down. For Alberta and in Saskatchewan, there's like potash and agriculture and oil. There's a lot of things. But overall, those cities are doing much better. Those provinces are doing much better.
What do you feel like any of that is changing? When we just had an election a couple of months ago, I think whatever your politics are with the U.S. and Canada, they've definitely put Canada on notice. For us to get our own act together, we can't just rest on our dependence in the U.S.
Yeah, so I think like in Canada, we talked a lot about the U.S. for a long time. I mean, probably for pre-Confederation, but since the Trump first term and certainly now, and I don't think Canada's been very affected by the U.S. in actuality. There's been a lot of talk, but the USMCA still works. So they renegotiated from the free trade agreement to the USMCA. And I don't really know who it changed, right? So I think it's a bit of a head fake right now to be so focused on the U.S. when I think the real problems are things that Canadians have done in Canada.
Like?
I think the immigration, I feel terrible when I see all these people who came to Canada who were seduced to come to Canada for a greater life, and they come here and they're doing Uber Eats, like all over the place. There's these guys on Uber. Then we decide that we don't like them using the GO train and the subway, so they're not allowed on them. Here are people who came to Canada, and I don't know how much money it cost to get here. They would go to a school that wasn't a real school. and they would take a bike and put it on the GO train to come downtown to deliver people to coffee at 8 a.m. I just think it sucks. I'm embarrassed that that's what our country did. I think we were very happy about our immigration system, probably happier about our immigration system than anywhere in the world. And I think everyone in the world look at our immigration system as a great system. So, just to increase the population without a real thought as to what systemically, what we need in the system to work was a mistake. I think that the focus on redistribution without growing the pie was bad financially, and I think it's bad socially. So I think, and by the way, I think the Canadian businesses can be more entrepreneurial and Canadian individuals can try harder. But overall, I think Canadians have to all work together to make the pie bigger, probably take more responsibility, stop talking about how terrible the US is because it won't help us. And I think next year we may actually have more headwinds with the US, so we got to get going.
When you talk with some of your, peers, your other CEO peers that you share responsibility for employees and growing the economy, does it feel like some of these pleas, which have been complaints for a long time, are finally being heard, or that you feel more agency to do something about it?
I would say that the governments that we're involved in, like for real estate, have been very open to hearing from the participants. And when I say participants, I mean certainly the developers, and they've actually listened to us with an open mind, but they're also meeting with not-for-profits and all kinds of different community participants. So I think that's been very good. I think Mark Carney is got a fresh slate. I think he's talked a lot, and I think he's on the right track. But when I wake up, I see that in the US, Trump did 6 things. And I don't care if you agree with them or disagree with them. Wow, there's a lot of things he does every day. And I think we got to get more focused on execution and getting stuff done.
Some of it starts with CEOs talking about it. Like, to be honest, Michael, you're one of the few CEOs who actually come out and say something.
We work very closely with the federal government, and they've been great to us, and we have a great relationship. And we speak to them in private about it. I think that, I love this country, and I love Toronto, and I don't find it cool to talk about bad things about it. And I always wonder, list me 5 places you'd rather live, and people start to stutter. It's not the best days we've ever had, but still, I think if you rank our country and the city I'm from in Toronto, plus lots of other cities in Toronto, they're good. And I think that, I don't know, maybe it's too much time alone during COVID, kind of talking to yourself or whatever. A very narrow group may not have helped, but we're very fortunate. We're in a rich country. We just got to use our resources and our people in a way to do much better. But I actually don't even think it's that hard if we're committed to it.
I'd love to get your take, beyond politics on what's happening in the industry, because I think politics, every business leader has to think about that. You mentioned REITs, real estate right now, just kind of being a sector that is out of favor, except it seems like, there's a bit of deal flow happening in certain areas of the market. And before we talk about those specifics, I'd love to know, what are you doing? Like, what are you kicking? Because you got these private businesses too. Like, what are you kicking the tires on? What do you think is interesting right now?
We're involved, as you mentioned at the beginning, in a lot of different things. What we're not too involved in is operating businesses. So there's a lot of seniors, self-storage, data centers. They need to have people who know how to run those businesses. We don't really do that much. So
it's not like you don't have a view on it. It's just, it's not what you do.
I like them, but I don't see where we're competitive at it. What we do is, in Western Canada, we do these master plan communities with a small one has 12,000 people living in it. So we create the whole community from scratch, working with the cities, and we're pretty active. And that's a very exciting, creative business. It makes a difference in people's lives. I was out in Calgary, and we got a big development there that's just starting. I think there was 22 earth movers that were creating the landscape for the development. And it just is an amazing thing to see that a flat farm becomes just a beautiful, attractive landscape. So it's very rewarding, and it's been very profitable. Last year, we had our best year in our history. I joked at our last annual meeting. It was impromptu. I had never thought of it before, but I was going through the different things we do in the business. I mentioned that this was the 30th annual meeting that I have presented at. And I think we've tried to diversify from Western Canada for all 30 years, but it keeps growing. So we failed at that, but I'm very happy that it's doing well, and we expect it to do very well over the next few years. We've grown a very large industrial platform. And while we were getting smaller, we went from 14 billion of office down to about 3. And we've gone from $1 billion of industrial, and this is back to 2016, from 1 billion of industrial up to about 16 billion today. And I think we're the largest owner operator of industrial in the country through our private and public funds.
Industrial is what, like warehouses for what industries?
In different countries, and they describe it differently, but it goes from anything like from small bay where people run their businesses through it to, very advanced logistics. They have a lot of third-party logistics where people are, taking items from manufacturer, putting into a distribution center, and then shipments to different people. But it's a big business with the changes in retail. Industrial's done well, and it's doing it's not on fire the way it was, but it's been an incredible 10 years for industrial.
Do you have retail?
We do. We have retail like the Distillery District. We have retail in, our retail is effectively ancillary to the other things we do. So we have retail in our office buildings. We got the Distillery District. We got retail in our condos. And out west, we have strip centers, grocery anchored malls, and stuff like that.
So, we're finding some growth areas for you. We're finding Western Canada is a growth area, office not so much, residential, flatlining, but maybe recovering in a year or two.
Well, we're building a lot of apartment buildings.
Where?
This year alone, we started 500 units in Western Canada. They're going good. We've got 1,000 under construction in the National Capital Region, and that's been pretty good. And in Toronto, we've got probably about 1,500 in lease up, I think. And we're starting a new project in the fall. And they're tough, very tough to put the pieces together. Slower lease up than we expected. Rents went up a fair amount. Now they're coming down a little bit. They're okay-ish. Like everything's ish. Yeah. But you can build an apartment and you can make it work. And that's replacing condos.
So we hear a lot of these REIT guests come on and say, right now, these companies are trading at such a discount to their net asset value. It's cheaper to buy real estate in the public markets than it is to transact privately. Have you been kicking the tires of any of these public market companies that either are announcing strategic reviews or maybe you're just putting an offer on the table?
Well, we worked with the Sovereign Wealth Fund to buy Summit REIT in 2023. And we've continued to look at different ones. I mean, I think that CEOs always say their companies are cheap. I think that they probably are relatively inexpensive. But when you're going to buy a company, you've got to pay land transfer tax. You've got to pay a premium. There's tax issues, especially for foreigners. So by the time you're done, they're not that cheap. So there's InterRent is being acquired and going to a vote August 24th, I think. There's been a couple of deals rumored. One of them is on a pause, is what I hear. And again, that has to do with this perception about what the value is compared to what a buyer. One of the things I would say is that most of the buyers are foreigners.
And that was the case in InterRent with Mike McGann.
Yes.
But he's got the Singaporean Sovereign Wealth Fund. And isn't that the fund that you did the deal with? So did you look at InterRent at all? Didn't they call you and say, hey, remember we did that in 2023? Do you want to look at this?
Well, we would do a lot of work with GIC and we talk to them every week and we explore lots of opportunities. But that's all I want to say about that.
Activists are pushing for these sales. There was an activist in InterRent. There's an activist in H&R REIT. Do you think that they can lead to something meaningful? Or why do you think we're seeing activism right now after years of this sluggishness? Right?
Yeah.
I struggle to see, can an activist, I guess they can just like force a buyer to come forward, but is that?
Well, the buyer's not going to be forced to come
Not
forward
forced,
by an
you know what
activist.
I mean.
The buyer's got to find it interesting. And I think activists have had quite a mixed track record in Canada of actually finding value. I think a lot of the activists see the difference between the trading price and the so-called NAV, whether it's analysts or from the companies, see that as the big opportunity. I think a lot of companies that have traded have been best in class that have traded at the premium. So, if you've got a great company, I don't know that the activist is what the motivator is. I think it's the real estate and the management company. So, activists are, they get frustrated for sure. What I would say is, and I'm not intending to be that negative on Canadian real estate public company. What I'm really saying is there's been a lot less interest in Canada in the public markets in just about everything. Just about everything.
Except, well, in the U.S., do you think of the U.S. as hogging some of those flows? Like an NVIDIA or something like that?
Well, NVIDIA is just a big vacuum cleaner, but Meta's done pretty good. Yeah, those things, the amount of money they're dealing with. But even if you deal with some of these like data centers and institutions are putting up $20, $30, $40 billion to build data centers, that's more than almost any of the real estate public companies. So there's lots of ways to do things. My point is that there's been a lot of things that happened in Canada over the last 10 years that have made it less interesting for shareholders to say, what I really need is to own a share of Canada. Because there's a lot of other things going on, and Canada is not as strong and competitive or seen as being as competitive as it was. And I think that's a big issue.
You mentioned there's a deal that you know of that you think is stalled.
Yes.
You didn't think I was going to let that go. Who is it?
You're still on BNN?
No.
Yeah, it doesn't matter. I just think
we break news on this podcast.
Yeah. No, I just think it's an example of the company and the investor just disagreeing on being very close, but disagreeing on value.
Would it have been recently reported? Can we hint?
Well, I'm not. You can hint to anybody in the world but me.
Okay.
We are seeing a lot more take privates.
Yeah.
There was one IPO that out of nowhere. I don't mean a negative. I'm just sort of saying like nobody saw that coming.
It was a U.S. Asset owner debuting in Canada. Was it called Go?
Yeah.
Yeah. And it didn't do well in the first couple of days. I haven't checked on it recently, which I guess is not great if you're trying to like stoke interest in Canadian REITs or listing real estate assets in Canada.
Now, I think around 2018, 2019 or so, I might be off by a couple of years, but the retail industry was expected to be going out of business. People were very, very negative. And I mentioned that industrial had been doing very well because industrial space has been used for a lot of retail distribution. With online, you need more industrial space. But a lot of the retail's made a great comeback, and the retail companies are performing pretty well. The apartment companies are performing pretty well. So a lot of the real estate companies are performing pretty well. Not crazy growth, but good, hard to replace it.
What a challenging sector. We've just gone through like so many, I know you're not intending to be negative, but in some ways, office, condos, just how REITs have performed in general relative to kind of a Mag 7. And yet...
No, that's not fair.
No.
The entire S&P 500 has performed terribly compared to the Mag 7. But I think that was a mischaracterization of what I said. I said our stuff in Western Canada is doing great.
Yes.
I think just about every asset class is doing great in Western Canada. I think industrial is doing quite well. I think retail, especially grocery anchored retail, is doing really well. Apartments are doing quite well. So I think on the operating basis, a lot of stuff is pretty good. Better than average.
That's where I was going with this is like, what is the lesson? Where is the opportunity? What is that kind of like secret sauce, the magic to making money in real estate? Because it can be a graveyard or it can be a kingmaker.
Well, I focus on the real estate, not the stock market as much in terms of creating value. And I think what we're seeing now is that there was a long period of time where real estate was effectively converting the yield from rents into retirement income. Incredibly valuable and huge. The magnitude of that trade was huge. And now interest rates are up. Bonds for corporate bonds are pretty good. And, AI is off the charts. The chip makers, Bitcoin, there's all these other things. So, I think the issue is when you have these huge markets, like for AI, it's huge. You got private companies that are 100 billion, 200 billion, and they're sucking up a lot of money. And you go through the different areas that have enormous growth. Well, that's a good place if you're into growth to invest. And if you're looking for retirement income, there's a lot of choices now. So I think real estate has to kind of find its place. I would suggest that the returns that real estate is likely to produce, effectively, the cash yield plus growth will look pretty good.
Over the long term.
Over the next 5 years. I think if you make 9 or 10%, which I think real estate assets and companies can produce, I think that'll be pretty good. It's just not that interesting to people. It's in between. Either they want like 5% safe, or they want probably 100%, but let's say 20. So I think right now real estate is a little bit lost because that's not exactly what the investors aren't looking for 9%, 10% as much.
I think it's interesting for somebody who's like made, a career and built sort of your fortune, wealth in this sector. And then you talk about all these other things like AI and other sexy things you could. So what do you do? Have you diversified, and do you look, okay, maybe now I'm going to start making money in tech, or is this what you just know real estate really well and you kind of stick to it? I'm just so curious, like, how do you do that?
My entire portfolio starts with the letter D. It's all the different dream entities. This is what I do. I'm fascinated, but again, like, I don't know anything about these other things, and I don't know how else to invest. I think that one thing I would suggest, I do not feel negative specifically, but I do think it's a more stressful world. It's harder I think everybody's a little bit more negative than they used to be. And I think we've got to get out of that funk.
And maybe live up to the dream, right? It's supposed to be an aspirational name. Having gone through, you've been doing this for what, 30, 35 years more?
Yeah.
So there must have been some incredible, trough times, and real estate feels like those, the kind of place where you can really lose your shirt. Can you just walk us through like one of those periods? Because I think there's maybe people who, that's a place where everyday people can try and get their start investing, buy that condo. And how do they avoid, it going sideways? How do you build wealth in real estate? Like, what's your best advice there? How do you ride out those really, really difficult times?
Yeah, I think that what's happening now is different than a lot of other times, because I call it the everything turns to poo. Because usually what happens is when it goes bad, everything goes bad. That's what happened.
Sounds like a children's book. You can write that.
That's what the chapter I wrote to the board in November of 2008. The title was "Everything Turns to Poo," and then the next quarter, it was "All the King's Men" and stuff like that. After Citicorp had to be bailed out twice, so those simple's good. But I think what's so interesting this time is if you've owned apartments for a while, every day is a good day. If you own industrial, they've tripled or quadrupled over the last 12 years. You're having a good day. If you owned strip malls, you're doing great. A lot of people are doing very, very well in real life. So I guess the things are, the capital markets are very, they have favorites. And I kind of think that's a step removed from actually running the business. There's a lot of the REITs are doing a little bit better. I think that the returns this year are up 6 or 7%, which isn't too bad. And a lot of the issues, everybody's working them out. So I think it's going to get better in the future. So I think it's okay. I think it's okay for sure. We're just dealing with a lot of stressors on the geopolitical level, at macro level. And then there's also some areas that are coming out of nowhere and becoming the most significant forces in business. I mean, I don't know, when you think about the internet bubble, it had nothing on what's going on. Today, these things are making money very quickly. And then they're making huge amounts of money. The internet, it was like, oh yeah, if we get shared, then one day something would happen. These ones, I remember with like Apple and some of them, that when interest rates go up, they get so much more interest. I think Apple has almost $200 billion of cash. I mean, that's hardly an internet thing and NVIDIA and everybody else, they have so much money. They're real businesses and they've got real good growth. So I think that deserves a lot of attention. Unfortunately, Canada does not have a lot of exposure in these. The whole country isn't. There's Cohere, Cohere.
Yeah.
I think they've done a great job. But a lot of these areas that are really growing, Canada's not participating in as much, and that's a problem for our country. But I don't want to make it sound sad for real estate. I think real estate's doing, on average, pretty much what it should.
I guess I'm trying to ask, like, how do you avoid being sad, in real estate? Was there a mistake that you made early in your career that okay, like going forward, I'm not going to do this? Leverage seems like an easy one that's where a lot of people can get killed.
Well, I mean, most of our business is doing quite well. And on average, our business is probably a 7.5 out of 10, probably as good or better than it's been. Like, we've had some times that are better, but on average, I think we're doing above average. Office has been a tremendous change. And I think the housing crisis, the government's focus on more housing, and then to see it come to a stop in condos, and this has been kind of shocking. And so I think those two areas are really where all the noise is.
Do you have to have a lot of cash to ride this out?
If you're in the condo business, you've got to have other income. And a lot of all the big players are good, and the condos are closing. The smaller players, it's been hard because it takes 4 or 5 years from the time you start, and the guys did a good job, and then they went and bought another piece of land, and then the condo took longer to build. That cost more. The interest rate was higher. The construction costs were higher. So, they didn't, then the next one is hard to get that one started. So, that's been tough. But there's a lot of apartments being built and they're turning out reasonable returns. So that's bringing in some life. We're building, I think we're going to start 2,000 apartments this year.
Where? All in Western Canada?
No, 500 in Western Canada. I think 400 in the National Capital Region and 1,200 in Toronto.
In Toronto. And that's interesting because we were just talking about how it's kind of a challenged market here. You found a way, the math works?
It's a very difficult market. We do a lot of work with the federal government on financing. The City of Toronto provided a waiver on development charges.
How big of a deal was that? For all the years that developers have been complaining about building in Toronto.
The development charges are tied to affordable housing. The federal government has one test of affordable housing, which is affordable, but not as affordable as the city. So the development charges are a benefit. The detriment is you have to have cheaper, affordable housing, but it works. It works, and we're very pleased with all the work we've done with governments. We found governments to be, very open-minded to try to come up with solutions, which has been great. But it's each project takes forever. They're almost like bespoke.
Like years.
Well, if we spend 18 months negotiating these kinds of things, that would be pretty good.
That's considered just negotiating.
Just negotiating the pieces so that you can start.
Not even shovels in the ground.
No.
Oh my God.
Yeah. But
So
that's for
exhausting.
each site. Yeah. But let me say, we built so many affordable housing. What we're building is amazing. We created a foundation that does breakfast and tutoring for the people there. This summer, we have 70 kids going to day camp for 7 weeks. And we do a lot of partnerships with not-for-profits and have them come to our communities. And we're building incredible things. And the people there are doing really well.
Well, I always like to end with legacy. How do you think about what your legacy is after all of these REITs and private transactions and everything you've done in real estate?
Well, you mentioned I have a lot of children. I have 6 children and a wife and a small group of close friends. And I think my legacy would be their respect and love.
What a beautiful way to end, Michael. It's been such a pleasure getting to know you and to talk about the industry a little bit more.
Thank you.
It's Michael Cooper joining us. Tune in to the next episode. We've got Larry McDonald joining us on our debut for the fall season. Don't miss it. We'll catch you on the next episode.